It took Bitcoin a span of 12 years to evolve into a trillion-dollar network. Despite claims that Bitcoin is merely worthless artificial gold, proponents argue that it stands as the best available form of money due to its decentralized nature, rendering it immune to shutdowns. Critics emphasize that many Bitcoin investors primarily hold onto their assets, anticipating an increase in value rather than actively engaging in transactions. This divergence in perspectives prompts various reactions, with some dismissing Bitcoin as a scam and others heralding it as a revolutionary force, challenging conventional notions of money and currency. Upon initial exploration, skepticism and misconceptions about Bitcoin were prevalent. However, the allure of the ongoing saga, marked by the mysterious creator Satoshi Nakamoto, who remains anonymous and is rumored to own a significant number of Bitcoins, proved irresistible. Nakamoto's potential wealth, tied to Bitcoin's value, introduces an intriguing facet to the narrative. The story of Bitcoin unfolds as a compelling exploration into the history of money, from barter systems to the use of precious metals, and eventually the transition to paper money backed by gold. The evolution of currency unfolds as a complex narrative, inviting us to delve into the crypto realm and gain a nuanced understanding of this transformative force in the financial landscape. The gold standard, once the monetary framework, was abandoned by the United States in 1971, marking a global shift. This departure detached the US dollar from gold, relying on the government's declared value. This transition empowered governments and central banks, enabling the use of monetary policy during financial crises. Fiat money, the present currency, lacks gold backing but depends on trust in the government. Debates surround the efficacy of fiat money, hinging on trust in government. In the late 1980s, cypherpunks emerged as an alternative for those skeptical of centralized authorities. Guided by libertarian principles, they focused on cryptography to secure communication and privacy against government surveillance. The cypherpunks perceived a contradiction between their values and the centralized financial system, dominated by entities with the authority to print unlimited money. The 2007 to 2008 global financial crisis eroded trust in traditional banks, intensifying skepticism. In 2008, a white paper titled Bitcoin, a peer-to-peer electronic cash system emerged, authored by the pseudonymous Satoshi Nakamoto. This 9-page manifesto proposed cryptocurrency as a decentralized alternative to traditional finance, laying the groundwork for Bitcoin. Nakamoto's innovative concept facilitated direct peer-to-peer payments without intermediaries, utilizing blockchain technology, an amalgamation of earlier cypherpunk advancements. This visionary paper responded to the shortcomings revealed by the financial crisis, offering a more secure and decentralized financial system. Nakamoto's framework for Bitcoin, outlined in a white paper, amalgamated principles from mathematics, computer science, and cryptography to create a currency facilitating trustless transactions. Trust was identified as a central issue, prompting the development of Bitcoin as a decentralized solution. To grasp the fervor around Bitcoin, it's crucial to understand blockchain technology, an entirely digital ledger. Bitcoin transactions, like traditional banking, are systematically recorded, but the key difference is Bitcoin's decentralized, peer-to-peer nature. While traditional banks rely on central oversight, Bitcoin operates independently, contributing to the widespread enthusiasm and fascination surrounding it today. This decentralized model addresses the core challenge of trust in financial transactions. In simpler terms, while a bank can restrict an account with $100 from overspending, Bitcoin, designed to be decentralized, faces the challenge of verifying the legitimacy of ledger transactions. Nakamoto's white paper introduced the concept of a distributed ledger system, diverging from a centralized ledger owned by a single authority. In the Bitcoin network, every computer or node in the system, open to anyone with downloaded Bitcoin software, holds a copy of the ledger. When a transaction occurs, each computer verifies its legitimacy by solving complex algorithms. A consensus is reached, and if valid, The transaction is permanently stored on the ledger. Attempts to validate incorrect transactions are rejected by the entire network. Transactions accumulate in blocks, each linked to the previous one, forming a chain of blocks, aptly termed a blockchain. Public identities remain undisclosed. Instead, individuals use public and private keys as strings of random numbers and letters. Mining, the process of validating transactions, rewards miners with bitcoins. Attempting to hack or invalidate a block would disrupt subsequent blocks, easily detected and rejected by the network. The Bitcoin blockchain allows transparent visibility into every transaction since the first block, without the ability to alter records. It operates as a decentralized currency, eliminating the need for trust between parties and transactions. The Genesis block, mined by Satoshi Nakamoto in 2009, remains on the Bitcoin blockchain, signifying Nakamoto's reward of 50 bitcoins for initiating the first block, commonly referred to as the Genesis block. Nakamoto embedded the supply limit of bitcoins at 21 million within the software code itself, and currently only 2 million bitcoins remain for mining. Although the intricacies might be overwhelming initially, several resources, like Skillshare, can help you comprehend Bitcoin and blockchain technology. Now, delving into Bitcoin's journey to its current value. After Nakamoto mined the Genesis block in 2009 following the release of the white paper, early adopters, particularly from the cypherpunk movement, and hobbyist miners propelled Bitcoin's initial recognition. The milestone Bitcoin Pizza Day in May 2010 marked the first recorded transaction of 10,000 bitcoins for 2 large pizzas, initiating the recognition of Bitcoin's tangible value. By the end of 2010, Bitcoin, once worth practically nothing, surged to 39 cents. The establishment of the first Bitcoin exchange, amidst, in 2010 facilitated easier trading with regular currencies. In 2011, Bitcoin reached a price of $1. And simultaneously, alternative cryptocurrencies or altcoins began emerging, utilizing the same blockchain technology as Bitcoin but with distinct purposes. While Bitcoin aims to be a digital currency, Ethereum, for instance, pursues different objectives utilizing blockchain technology. Despite the rise of numerous altcoins, some are questionable and may involve schemes like Ponzi or pump and dump. However, Bitcoin faced early challenges due to a poor reputation and involvement in scandals. Its private and public key system offered a level of anonymity that attracted criminal and illegal activities, notably seen on the dark web's Silk Road, where Bitcoin was used for transactions involving illegal substances. The website, operating in the deep web and utilizing Bitcoins, proved challenging to infiltrate, associating Bitcoin with black markets like Silk Road, tarnishing its reputation. Mt. Gox's collapse, handling 70% of Bitcoin transactions, was another major scandal. Despite this, demand persisted, especially during Bitcoin's worst days. Companies like BitPay facilitated mobile transactions, heightening cryptocurrency speculation. In 2013, Bitcoin reached $1,000 before dropping in 2017 when Japan recognized it as a legal payment method. The market became greedy, irrational, with companies adding blockchain to their names, causing a surge in share prices. Bitcoin's value peaked near $20,000 in December 2017 but swiftly crashed, losing nearly 15%. Government crackdowns, cryptocurrency exchange bans in China, and fear of losing money led to an 80% collapse in cryptocurrency prices by 2018, surpassing the dot-com crash. Despite Bitcoin's fall to just over $3,200, its value remained in the thousands. 3 years later, Bitcoin soared past $60,000, fueled by institutional interest. Companies like PayPal and Tesla embraced cryptocurrencies, contributing to the current fervor. As the U.S. Federal Reserve printed money, inflation fears grew, altering the narrative around Bitcoin from a currency to a store of value. Institutional interest, previously lacking, now drives Bitcoin's current surge. The debate over Bitcoin's worth and allegations of price manipulation persist, with former PayPal CEO Bill Harris calling it the greatest scam in history. While some view Bitcoin as a store of value, others question its current price, highlighting the ongoing controversies surrounding its development.